Hey guys, just wanted to make a quick video on Fibonacci and how I use the Fibonacci tool. There's a couple of different ways you can use it, but the main way I use the Fibonacci tool is using for retracements and then targets, especially for things like bull flags. So we've got a really nice one here. And what I should say first, the way to measure this tool is we want to start at the bottom of the last dip before the rally starts to begin, right? So I will go down to the lowest wick before the push starts. And I'll just get my Fibonacci tool, which is just this one here. So it's 2 down underneath the arrow, Fibonacci retracement. We just want to click on that level and then we want to drag it all the way up to here and then drag across just like that, right? And what that will do is it will measure the advance that we just had, right? So look, let's have a quick look at what I've just written down. Price rallies up with a strong push into a new high, right? Now we must measure the advance with the Fibonacci tool so that we can find support on the level and the key retracements, right? So the key retracement levels that we want to be looking for, the 0.382, right, which is what I've written here, and the 0.618, right? Now, the general rule is if price can hold above the 0.382, right, which is this level here, then we're going to be looking for the higher target. So we'll be looking for target 2, right, which is actually this one up here. So the 0.618. I've actually put a negative in front of that, right, to give us the targets. You'll have to put those in manually. I'll show you guys how to do that in a second, right? Now, if we end up coming down deeper, so let's just say that price here end up retracing a little bit further, came back up, and then we came back down here and tagged the 0.618 and then came up and then reclaimed it, did some sort of an inverse head and shoulders type setup. Then I would be looking for the lower target, which is this one here, which is the negative 0.272, right? And so these negative 0 targets are just actually, it's the 1.272 and the 1.618. And I've just sort of hacked the algorithm a little bit of how it displays the numbers. It's actually this number here. So it's the 1.272 and the 1.618. It's just so we don't have to constantly draw it inversed all the time. So if you want to get those on your chart, just draw a Fibonacci like this. Right click and then go to settings, right? And then you can just copy my Fib retracement settings. So I've just found 2 random numbers in here and replaced them with negative 0.272 and negative 0.618, and then just change them to green. And that's going to give me the 2 targets. So I was actually taught this setup by somebody who now runs, at the time, he was a very successful foreign exchange FX trader, and now he actually runs a hedge fund. He taught me this strategy and to put those in like that. So it just works really well. We see these levels get respected all the time, and then also we see a lot of profit taking at these targets, right? So I've written down here, can't leave this one out. When using the Fibonacci tool, we must always measure wick to wick, and we find the lowest wick before the advance begins, right? So we want to find that dip, find that wick, and then measure to the top wick here. So I'm just measuring from this bottom wick here up to this wick here, and then I'm looking for the key levels, right? The higher that the retracement holds above certain key levels, that tells us that the advance is most likely going to be higher because there's people willing to buy and hold the price up at higher levels. All right, so let's go have a look at it in action in some of the markets. Right, we'll go to the one on gold first. So this is obviously on the daily time frame. I'm going to show you multiple different time frames of this playing out. So here we have Fibonacci, and I've just taken the wick from this bottom one here, which is actually from the COVID dump last year, and we've taken it up to the top of our trading range through here, right? And then we can see how this plays out over the next couple of months, right? So start to push up, go through the 0.272, right? So we go through, it holds very high at the 0.26236. And then we push quite aggressively, right? And this one actually goes all the way to the 1-to-1 move. So all of this is this point from here to here, right? And that's just doubled. So that's a 1-to-1 move. And that's the highest target. And that's the one that Roman always likes to look for, right? I generally don't use the one-to-one as much, but this is a really good example of the third target being hit perfectly. I'll just drag this out a little bit so you can see, but we actually blew straight through the 0.618 on this one, but it gave us the indication that it was going to be quite strong because we held this whole retracement above the 0.236, right? It didn't come down to 618, otherwise we'd be looking for here. Didn't even come down to the 382, otherwise we'd be looking for here, right? Okay, let's move on. We're going to take a quick look at Ethereum here. So I've just taken the Fibonacci tool. I'll draw it in quickly for you here. Right, so we're going to take the low here before the push. We're going to go to the ultimate high and then drag across sideways, right? Just make sure it marries up quite nicely to your levels, right? And so we can see here that price comes down, it bounced off the 382 at first, goes up, rolls over, puts in a low high. We sort of changed our market structure. And, you know, if you want to really add to it, you could. And you could say that this is also a falling wedge, right? And so what we want to be doing is buying, you know, around in between the 50 and the 0.618. As close as 618 as possible on this now that we've broken these levels. And then once we break out from this trend line through here, that's sort of confirmation. And then we'd be looking for, you know, at least this level up here, right? So let's see how that has played out over the next couple of weeks and months. So it's going to be a little bit slow. Sorry for the snail's pace. But we can see that it's starting to push now. I'm just going to cancel it so we can see. Right. And that's the result. We've come up and we've hit the 272 and it looks like it's starting to make its campaign advance onto the 0.618. Let's go to one example in foreign exchange, right? So this is actually it inversed, right? So we can do it going up and going down. Now we can see price is trending down here, right? And so what we're doing is we're taking an explosive move, which is this move from this wick here to this wick here. And we've also formed what we can see is a bit of a bear flag as well, right? So, you know, you could draw this in like this, right? And that's your bear flag. And I've also drawn in the key support and resistance level through here, which is sort of like a bit of a double bottom that then rolled over. And so we've got two nice touch points here and they came up and rejected here. Now this trend line through here as well, we've come through and we've just rejected that twice now through here and beginning to roll over. So this looks like it's going to break down, nice little bearish movement. So impulse to the downside, move back up, tag the 0.382 in key level, and now starting to roll over. So what I want to be looking for is price to come down to here, target one, and then target two, right? So let's see how this one played out. And see it comes down to target two, and then we bounce off that and price ends up moving off, right? So pretty good examples all through there. The last one I want to look at quickly here is Bitcoin. I'm not going to play this one with the replay tool, but you can see that you know, this was the area that we measure it from about 9,800 all the way up to the top, right? And then when prices, you know, chopping around through here, what we want to see is the 0.618 hold price up, and that will tell us that, you know, momentum is continuing to the upside. If we can put a bottom in through there, and we could expect higher prices, right? Now we can also use this as well. So this is more of a macro way of using it, right? We can also use this to look at our targets. So the next targets here for what we can see is about 80,000 for one BTC, and then also 98 or 100,000 would be our target too, right? So, you know, that's sort of a higher time frame look at it as well. And then I believe I have one more for you also, might be this one, sorry. Right, which is actually the macro view when we actually track a whole market cycle. Now, this one's going to be a little bit more tricky, and it's actually going in the reverse. And we can use this to spot our key levels and targets in the macro cycle. So for this one, I'm going to actually map the entire bear market cycle of Bitcoin here, right? So we're going to go from the top here all the way down to the bottom of the market cycle. So I'm going from this point up here all the way down here, and then I'm going to drag across like this, right? And then that will give us some key levels to look at. We can see how price interacted with them. And here you can see as we've come up, all these levels have been very significant, right? So You can see that we came up to 2.272, got rejected off that. Had a little bit of a pullback here, some selling pressure at the 2.618, but nothing like an ultimate top. Blew straight through there pretty quickly. Then the 3.272, rejection off that. And then obviously we put a long-term top in from the 3.618. So we can also see that this also acted as support in multiple points as well throughout the chart. Right, so acted as support from the 1.618 back here, acted as support all the way through here at the 1.618. Then we flipped it here. Our low just recently as well was a 2.272. And then we just flipped as well the 3.272 through here. So 3.618 hasn't really mattered that much on the last push through. And now the next key levels are 4.236 and the 4.618 we need to watch for, which is 80K as well, which also lines up with our with pretty much the 0.272 target here, right? So a lot of times these numbers will overlap, which sort of gives us a bit of confluence. I like to look at for these key levels and then also add in, our pattern, shape patterns and things like that as well. Like for example, a falling wedge, similar to what we just looked at Ethereum, for example, and then also things like an inverse head and shoulders off key levels of these Fibonacci levels as well. So there's multiple ways to use them. Add them in with your order blocks and stuff like that. When you get the confluence of multiple levels overlapping, it gives you a lot more strength and confidence to go in with that trade. One thing I really do like using them for as well is divergence trades, but we'll have to look at that in another tutorial. Thanks a lot for tuning in, guys.